Well, in your business news, the International Monetary Fund has trimmed its growth forecast for China and the eurozone in its latest report. It says overall global growth remained low and uneven, despite what it called remarkable strength in the U.S. economy. The IMF left its forecast for global real growth for the year unchanged at 3%. The agency said the world economy is, quote, limping along. For China, the estimate for 2024 is now lowered to 4.2%. That's from 4.5% in July's report. The world's second largest economy is battling an unprecedented property crisis, which is stifling activity. The IMF's chief economist said China needs what he calls forceful action on the sector. GDP this year forecast to expand at 5%, down as well from a previous estimate. Well, we turn to our correspondent Caroline Malone. She's joining us live from Washington, D.C. Caroline, that's quite a gloomy outlook from the IMF. Apart from the ongoing slump in China's property sector, what are the other key risks named by the agency?
Well, the IMF saying that global outlook has been impacted because a number of countries are still recovering from the pandemic. But there are more recent factors such as geofragmentation. One example of that is the ongoing Russia-Ukraine conflict, which of course has been running on more than a year and a half now and has a particular impact on global energy prices. And that has pushed inflation in a number of areas, particularly in Europe. So Europe suffering as a consequence of that. So inflation really something that many economies have been having to deal with in recent years and using interest rates effectively, the IMF said, on that. But there are other more recent shocks as well. And that, of course, is what's happening right now with the Israelis and Palestinians. The IMF saying it's really too early to assess if that will have a long-term impact. But we have seen oil prices rise already in the last few days. And then finally, the IMF talking about natural disasters and climate-related events as also having a negative impact on the global economy.
So there are some bright spots. The IMF raising its growth forecasts for the US as well as India.
That's right. Both economies are doing relatively well at the moment. The US in particular, solid growth of 2.1% as a forecast. India, 6.3%. And both countries doing particularly well because of consumer spending. They've had higher than expected consumer spending, recovering nicely from the pandemic. So that's one reason that both economies are doing well. However, in the US, as well as a strong labour market, there have also been a number of strikes related to workers unhappy with their conditions and wages. In particular, we've seen strong auto workers strikes, big numbers of people there, and in the healthcare sector. So there is still some uncertainty when it comes to the labour market in the US, and that could have an impact longer term on the wider economy.
Thanks. Caroline Malone speaking to us from Washington, D.C.